Hello guys, and welcome back to the channel. So in this video, this is going to be one of the best videos that I make about Palantir, and I'm really excited for you guys to see this. And by the way, feel free to challenge me after this video. The reason why I made this video, because honestly I was looking at Palantir, and even though the stock price went up after the last earnings, I still did not feel good as an investor, and I couldn't tell why. And I started looking at it and I said, I'm not happy with that the company is slowing down its growth. And if you're a good long-term investor, you should be worried about this. Honestly, I don't give a rat's butt about the fact that they became GAAP profitable. That doesn't matter anything to me. I want to see this company grow and obviously get more customers. And when this is not happening, and it's not happening as fast as we want it, you start going like, is this breaking the thesis? Is something going awry? Is it something to pay attention to? So, and I started looking into this, and you need to see this video, because this video is going to make you have interesting feelings as an investor with Palantir. So Palantir is supposed to be a growth company, and yet the company has seen its growth slow down. This is the table that you can get if you're a Patreon member, link in the description box below. This is my own, part of my own Palantir evaluation model. And you can see this is the revenue growth year over year, and you can see that it is slowing down. And the next year's 2023 guidance was 17%. So they're guiding for a continued slowdown. And you can see that the adjusted operating margin is also going down. So this is obviously not good. Now, what if I told you that this slowdown in growth was completely predictable and in fact completely inevitable? And this would also mean that it's not something that we should worry about, it's just something that we should understand. By the way, if you watch this video and you like it, all I ask in exchange is that you subscribe to the channel and hit the like button, because it really helps the channel out. So in order to look at this story, let's go back to Palantir's origins. This is the first time when Palantir reported on the stock market. So this is their first business update, Q3 2022. And they have this slide in this where they show that in 2019, so this is when they were private, the top 20 customers were 68% of the total revenue. And that means basically, let me translate that for you. That means that basically Palantir's whole business was 20 government or very big corporations, and they had no other business. Basically, if any one of these clients would cancel Palantir, it would be a huge blow to the company. And my theory is that this is probably, DOG and some other military government organizations that basically helped develop Palantir Gotham, and they just kept scaling and scaling and scaling. And it's the same 20 customers year over year. And then as Palantir developed the Foundry, 5 years ago, they saw traction and they started getting new customers, and then they decided to go public. But they actually went public very early on, when Palantir was basically this top 20 customers, right? Then you can see that this number went down to 61% in 2020. So this is very, very good, right? And then you're going to see another slide in this where you see that the average revenue per the top 20 customer went 36% up, from 17 million to 23 million per customer. Okay, this is going to be very important. So in the latest stock market report, the Q4 2022 report, you see that now the top 20 customer, again, just compare it, it went from 17 million in 2019 to 49 million in 2022. So that means, again, my suspicion is that it's the same customers. So this top 20 customers don't change. It's probably DOJ, whatever, CIA, all these organizations that they have had for a very long time. So they have been scaling and scaling and scaling and scaling with Palantir, right? And also, let's not forget something. As Palantir onboards new customers, they usually cost Palantir money, because they have to go out with the forward engineers and they have to adjust the program. They have to, teach the people how to use it, and that is very, very costly in the beginning. But then once Palantir and Foundry is set up at the company, they pull back, and this is when the profit starts coming. And this is in a fantastic slide. I'm gonna move even my face, which is not in any of the new reports. And I don't know if it's because they have handled this, but it's very clear here that the customers go through 3 stages: the acquire stage, the expand, and the scale phase. And they list here how much revenue the acquire phase brings and how much it contributes to the profit margin of Palantir. And here you can clearly see that in 2020, June, they were losing 14 million on onboarding new customers. So that means that at this time, if Palantir would onboard 50 new customers, which would be a super good thing for Palantir, you would see an increased loss on the income statement for Palantir, right? And then you can see that this loss was getting a bit better, but it's still a loss. And then you can see that on the expand phase, when the company realizes how good Palantir is, then it's contributing 35% to the margin, and in 2020 41%. And then you can see that in the scale phase, when the customers have scaled up, Palantir is basically printing money, right? So this is very, very important for us investors to understand. So if you see Palantir getting a lot of new customers, what you should expect is that their adjusted operating margin goes down. And what do we actually see? When we look at quarter after quarter, the adjusted operating margin is going down, right? If you don't understand the previous slide, right, you would freak out as an investor, because you're like, oh my God, the company is like not getting profitable and they're just going further away from being profitable. But in fact, and I must say Palantir doesn't do a good job on showing this, and this is my speculation based on the numbers that I see. I think what is happening is Palantir is onboarding a lot of new customers, and this is why the adjusted operating margin goes down. But obviously, while this sucks on the short term, this is fantastic from a long term point of view. This is the second thing that you would see as the customers mature, that basically when you have a top 20 customers that are huge and they start expanding less with you, and then the new customers are very small, then the net dollar retention starts going down, and it's just, again, it's a natural thing, because if you have this customer who increases their sale from 50 million to 55 million, which is only a 10% increase, but then you have this new customer who went from 1 million to 3 million, which is a 300% increase. If you average it out, your business still only increased 10 plus something percent. And again, this is also exactly what we see in the net dollar retention, which should be a very alarming thing. But again, if you understand what is going on behind the scene, and again, I must say, I don't know for sure that this is going on. This is like, I was reading all the Palantir reports, and this is what I think is going on, but Palantir does not do a good job of communicating this in their reports. So this is why the slowdown was inevitable. We have to do some math, guys. So if in 2021 the total earnings was 1.5 million, and I did this calculation based on the reports, the top 20 customers earned 880 million. That was 57% of the total revenue. And in 2022, the same top 20 customers was 51% of the revenue. So this is fantastic compared to how Palantir started, because they were basically just 20 customers, and and then some small customers when they came out, when they DPO'd on the stock market. And now it's much better, but still the top 20 customers is very, very significant, right? So if the top 20 customers are 51% of the revenue, and Palantir has grown only 24% this year, and we saw on the slide that the top 20 customers only increased 13%, right? But Palantir increased 24% this year. So the only way that that can be true is if the non-top 20 customers actually grew 39%, which is a fantastic amount of number, fantastic growth. But because the top 20 customers are so big, it kind of suppresses the growth rate of the other half of the company, right? And I believe that the top 20 customers at this point, they are very mature relationships, and it's not likely that they're going to expand on an S-curve. So you cannot expect that an organization that is already spending 49 million a year with Palantir is suddenly going to go to 70 million and then the next year to 90 million and then 120 million. It's completely unrealistic. So, but what is realistic is that you get a bunch of new customers who are scaling like crazy, and after they have scaled big enough, they start to be not suppressed by the other top 20, and the growth number starts to go back up for Palantir. So Palantir guided for 17% growth in 2023, and this is very, very low. Investors were not happy with this, right? But let's say that the top 20 customers further slow down to only 8%. But then to get to the 17%, the rest of the company still has to grow at 26%, which is a quite nice growth rate, right? In a recessionary environment, it's much nicer than 17%. We can agree with that, right? So, and again, I want to remind you that this is just my speculation. Palantir does not do a good job of breaking down these numbers. So what do you need to watch for as an investor in Palantir earnings reports so that you feel safe and you feel like you can diamond hand through these very, very bad times and hold your stock until the value goes back up? So to truly understand Palantir, or to truly understand how the business is doing, you need to see if they're getting new customers. That is the simplest, the make-break point of the thesis. Is there new customers using Palantir? And it's the number. It's not like, oh, we expended 500 million or whatever. It's that the customers went from 300 to 400, and now we got to 600, and the customer number needs to scale. And unfortunately, when the customers scale, as I showed it to you, this affects the adjusted margins, and this will not look good for a while. But this is something that we have to be willing to pay as long-term investors, because this will result in a very, very profitable company, because as they scale, the top 20 customers will be a smaller and smaller part of the business, while the non-top 20 customer is going to be a bigger and bigger part. And I believe that this growth rate will pick back up to an average of 30% per year. I cannot prove this. I cannot support this with any evidence. It's just when I read the reports, this is the hunch that I get. And dear Palantir, if I would ever do a dear Palantir or this type of YouTube video, I would say please break down your numbers better so we can see what is the net dollar retention of the new customer cohorts. What is their lifetime value? What is their average contract size? How are you doing on those? Because we understand that it's completely unrealistic to expect the top 20 customers to significantly increase their spending with an S-curve, and it kind of makes the company growth rate look not good. So let me know, guys, what you think in the comments below. If you like this video, remember you have to subscribe. Why not check out the Patreon? And thank you so much for watching, and I'll see you in the next video. Ciao, ciao.